Not exactly surprised. Surprised. Market charting. Charting market. Charting markets. Market charts. Unity. Move to 30. Hmm. Time to move on. Right back to 350. Now SSR will be on, so GME's down about 9% today. Like I said, I wouldn't be surprised if it came back down to 29. It hit like 30.7, so is it in the middle of an S? You mean like to the downside or to the upside? I don't really see a strong case for holding up just yet, but like there would be a support right here around 340, like a pretty significant support. So there would be, again, a support there. So I think that that's something to just keep in mind. You might have like a hesitation, is what I'm saying. Like it's very likely, I suppose. It's the right way to put it. Got too much stuff going on right here. Can't see the wick. I think that's it. Yeah. Well, anyways, 324. I don't think it's going to stop there. I mean, I think it's going to keep going, but I mean, there will be probably a substantial amount of time just chilling out first. I mean, it would be surprising to me to see it drop all of this in like one day and not even bounce. This is a little different than what happened in 2024 in May. You have in May there was these two big gaps, but the second one was huge. And almost everything happened here in regular trading hours. So it doesn't feel like there's going to be this kind of giant, I mean, the rug pull idea is still there, but it's not like, I don't think it's going to be super, super, super fast. So what I had drawn yesterday was some estimations of that based on some basic things that I was looking at. And then we did it again using an upside down chart comparison just to see what that looked like. And pretty much without even trying that hard, I mean, it looks like I copied the same thing, but it really wasn't copied. We went back and we looked at 2020 and we did an upside down chart here. And this is what we came up with. And it wasn't, I think what's good about this, and maybe it's not what we expected, but it wasn't as bullish to the upside as I thought it might be on that drop. That was surprising to me. Just looking at the nature of like relationships and like where that went to in 2020 when it broke out versus where it is here. A lot of it has to do maybe problematically, I suppose, with where this developed. And there was a strong possibility that it doesn't even come up this high. You know, I think we had seen that there were target possibilities around 1050, but that's pretty low. Maybe 1150. Previously, I'd seen like 1250, 1240, something like that as like a more likely candidate. And maybe it doesn't sound like a lot, but being $1 off here and there is quite a bit, because that's the difference between making a new high and not making a new high. So when we did this comparison yesterday, I think we basically finished it. I don't really want to do it all over again. That's not what I'm saying. But there was some surprising information there, you know. And one of the bigger pieces of information I think that was a bit surprising was this 639 level could act as a very strong resistance. And just depends on how we kind of traverse it. But there certainly is a possibility that this ends up not going very high. You know, we had given it a little bit of extra room here, but realistically, like, it could have been significantly lower. This could be down here, even building a support between like 630 and 540, you know. So there was a lot of question marks about maybe where that's going to be, but ultimately, like, that was kind of the one-to-one that we did. And the reason I'm talking about that is because when you think about downside here, there's like a multi-phase kind of aspect to it. And a lot of it will be determined based on how low you think it's going to go. And how low I think it's going to go is largely going to be determined, in my opinion, by what I see as the comparison to what happened in 2020. And the biggest difference is this marker here being not the same. Like, that this is going down, and in 2020 it was going up. So there's a significant difference in like where this might be trying to position a reaccumulation later as a result. So in the 2020 model, it would definitely have been up higher. You know, it would have been at the top. And I think this has been a long ongoing thing for me, because I've come back to this quite a bit, and we've done the big chart, macro chart for AMC quite a bit. And one of the things that just really bothered me early on in the comparison was that when you do this comparison and you do like a 2-year, year-over-year kind of comparison deal, the temptation was to kind of just go sideways. And one of the kind of the earliest indication of two things that really made me question this. Like, first was the fact that this doesn't actually meet that same level. Like, there's not a consistent flat top here, which is very odd, because you would think, again, that this structure would have built out formation-wise, like underneath a solid level. And it does, but it first has this like hesitation moment earlier on, which seems a little bit like irrelevant, but when you're doing a comparison and you have a lack of continuity, it becomes pretty important. And so one of the things was like, this is at an angle. And I know like that early on that was the case, and we talked about that. I said, it's possible, even though I didn't really like the idea, because it's hard to, how would you draw it, right? It's like, you can't do this program's great. There's nothing, I have no problems with TradingView as a program, but there are definitely limitations. Like, you can't draw an angular, you could draw an angular curve, but it's like, to then make it work like a curve is supposed to, like, this would have to be sort of like perfect, I guess is what I'm trying to say. Like, perpendicular is one thing, but like having this set up and then knowing where those angles are, it's complicated. It's not really that simple. So there were things that like I was thinking about early on that I thought, well, I can't do that, you know, because I'd have to have the end in mind and kind of know where it's going to land. And now that I think I've kind of got it, I sort of think that that's probably the case, that that is essentially where it is and what we're going to see. And I don't know if for a fact it's going to be this late, but what we're going to see is a kind of 2-year cycle of sorts, but it's actually going to build out like here. And this is almost impossible. Like, it's almost impossible to figure that out, you know. Like, it would not have been easy to sort of determine like that's where the top is, like this angle. How would you do that? I mean, all you have is what you're given. So it's really a bizarre question. But yesterday when we were doing that setup, it influences the bottom. And so if you think that this is going to be like horizontal in nature, you would have put the buy-in like this whole region right here, which is just the shifted version of it. You would have put it probably just opposite, you know? And I'm like not necessarily opposed to that, but that's what I was doing before in some of the earlier models. I was kind of like, yeah, that's where it might be. But the more I thought about it, the more I was like, well, the reason that this is so odd is because they offset it. It's like if you took 2022 and like squashed it down and you left a huge amount of open space, would you just have like a bleed up, or excuse me, 2020? Would you just have like a bleed up in 2021? Like where would it reaccumulate, right? Because in 2021, there's no separate ranges like here, 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 here. It's not 4 different zones, where this is like 4 completely distinct zones. There's this top, there's this middle, there's like 2 middle zones, and then there's a bottom. And it's strange because the only one that hasn't really been traded is actually this middle one from like 7 down to 540. And everything else, this has been pretty thoroughly explored right here. And then this has been pretty thoroughly explored down here. And, you know, we can kind of pick it apart and say, well, certain areas aren't greatly explored. Like that's not, right? That little gap. But then if you go into a spring, you're going to kind of get that lower area explored a little bit more. And that's kind of the finale, in my opinion, when you, if and when you have a spring. So it's like, when you start looking at it that way, it's like, well, it almost makes more sense to do an accumulation like kind of in this red zone that I marked off, which is then what actually ended up looking more correct when we did the comparison. But again, you would have had to sort of known that ahead of time that that was going to be avoided. And we didn't know that until maybe December, because they did not go up higher. So because this doesn't have like a secondary buy-in that goes up top and trade that higher area, once again, they kind of like avoid that, and it's just different. So one of the things that when I was kind of originally looking at this was like, I was assuming, maybe wrongfully assuming, that this was going to be more or less sideways and not at this kind of angular distinction. So when we were doing the comparison yesterday, it was a weird comparison, but I'll summarize it because I know everyone wasn't here. I'm not going to do it all over again. Don't worry. But what we did is we flipped the chart upside down, and I went and looked at the, the 2020 region upside down land as well. And the reason I flipped it is because sometimes it's easy to get a little bit, I don't know. It's like when you say a word too much and it starts losing its meaning, and you're like, what does this word even mean? And the same thing happens when you like look at something too long. You almost like objectify that thing. It becomes just like an object. You just start studying it, and it's like, whoa, what is even this about? And sometimes when you do that, you sort of get tunnel vision on the overall. So you sort of see it one way, and you don't see like the pieces and how they interconnect. So we did it this way because it's just an easier, like, frankly, it's very non-biased in my opinion, because you're kind of suggesting almost like it's going down, right, when it's upside down. But what we found was that there's actually quite a strong structure resemblance, very strong. But the differences should not be overlooked. And I think if you overlook them intentionally, you're going to be biased about it. If you overlook them intentionally, you're going to come up with a solution that doesn't really work. And when we looked at it as it is, it doesn't give us as bullish of an outcome. And then also, it kind of gave us question marks about how low this actually goes. So I'd previously thought this might go down to like 180 something. And even though that's not impossible, it is possible. There's some strange like numbers here that didn't really add up to giving me that like perfect number. I was like, well, I'm not really getting that perfect 180 that we were getting before, 188 or 185. It's just not really showing up in this comparison. I did it as thoroughly as I could. And what I found was that there's not really that much to go off of in terms of a low. A lot of people are going to say, well, yeah, you could do some kind of extension or there must be some reason for it. I'm not really sure. And one of the things that we also talked about was how if this ends up being like a repetition where you repeat the same thing again, as frustrating as that might sound, what it could mean is that what we're actually enduring right now is a kind of phase B bottom. And I went through and talked about how like it felt like it should have been a spring. But when you look at the structure of this kind of model that we use, let me try to fix that real quick. This idea that this is somehow definitely like a spring right here doesn't really make sense, because this actually made a lower low. And normally if you have an auto reaction, which I think this guy is, that's like the 2020 area. I'm intentionally like keeping it upside down right now, but we'll get to the 12% down if you want. That's half of the value that we had yesterday, which is like a 24% max, I think, gain. This could have been thought of like an auto reaction in a phase B, but normally an auto reaction would be, and a healthy auto reaction with a phase B would be higher. You wouldn't come back below. When you have an auto reaction and then you kind of go back down and make a new low, it doesn't reset it necessarily, but we would normally look at that and say that's kind of an SOW, which is exactly what ends up playing out later as this comes way back down. And again, because we got the chart shift, it goes worse than that, because it goes and it shifts the chart lower and you get an additional drop in addition to like what would have already been normal. So that's why when I look at that chart shift, I don't think it's theory. And I know I've said before, like it's theory or whatever, but I don't actually believe it's theory. Like I actually think that it's legitimately exactly correct. I think this is what we're really experiencing, and we're chopping along the bottom. But when we shifted, it now looks more like this. And so you have this kind of strange interaction between these variables that almost doesn't make sense. But if I were really looking at this and thinking about this as like a Wyckoff range, I would actually, I hate to say it, but I would kind of assume that this is like a upthrust, because, and it's not actually a good thing in some ways, because the more I stare at it, the more I'm like convinced that that would have been a sign of weakness. And this would not necessarily just be like a spring. This could be like a phase B kind of middle. And then the next thing that happens would be some kind of a distributive action. And usually that's just coming back over maybe all-time highs. But we've seen this before, because this happened in 2022. When it got that big upthrust, it almost doesn't matter that it came above the top. At first, I thought that has to be bullish because it made a higher high, and then it never made a lower low. So until it makes a lower low, which it eventually did with the Judge Zern decision, it's probably bullish still, which makes sense to me because, again, it had made a higher push. It's like a change of direction. But it never makes another high, and then it ultimately comes down and makes a lower low because of that SOW. And I guess in the beginning, I just kind of imagined it's only a penny or whatever, a few pennies. It's just a spring bottom, and this is all part of one auto reaction that's very bullish. You could make that case, but then this would then still be an SOW. You know what I mean? Because then if you're looking at it on the bigger picture, it's like you're basically saying the exact same thing. You're basically saying that this is like a carbon copy, which I believe it is, of the bigger picture. So you'd still be saying this is an SOW. So why does this matter? Why am I talking about it right this second, right? Why are you being so bearish? Because I care about AMC as much as the next person in terms of like the film industry. I really do. I really enjoy the film industry. I want it to succeed. As a company, I think AMC has a lot of problems that they're not really working out as quickly as we'd all like. And they've tried a lot of really innovative solutions that some of them have been pretty good and some haven't. They've diversified, they've expanded and acquired different assets, but they still have this glaring debt problem. And from a fundamental standpoint, it's easy to make a bear case still, because if they liquidate, they don't have enough to cover their liabilities. They just don't. That's not a good place to be. They do not have enough assets. They don't own real estate like like some of the other cinema places or like your McDonald's and stuff. Like that's their big asset, is all that real estate. It's worth fortune, you know. And they just have a bunch of leases and other stuff. So there's just a lot of weird, and then they've got a mountain of debt. There's a lot of weird things here, right? That at first I'm like attributing a lot of this to like that shift value and all this other stuff. And now I'm looking at this comparison that we did yesterday. And I was thinking about how like when we were doing it, we came up with this really low value and it didn't quite make sense. So I was like, well, why would we kind of stop here and then just barely go up? And actually, believe it or not, I don't really think that a lot of people are going to enjoy that analysis. They're just not. There's actually a pretty strong evidence based on what we did that it doesn't even come past $20, which is insane. And at first you would think that doesn't make any sense, because why wouldn't it go fill the gap at 43? Isn't that the bigger gap? That's just what you said, Booksy. Yeah, I had kind of assumed that because I had assumed again that this was sideways. And when you do the build out with this as the first ledge, meaning like $11 to $12 as the first ledge, then the next ledge is 35 to 42. But if you do it based on just the local structuring in this kind of like upside down model, I'm not going to fudge the numbers just because people don't like it, you know? Like, and I don't like it, first of all. So I'm just going to say that I don't like it. But that's just a personal preference, right? For like what I would rather have happen. Instead, all I'm doing is just kind of observing where those markers actually are. And where they actually are is not very high. And it is frustratingly challenging to say that, because then you realize that if you do this markup and you don't come above the top, that you couldn't, it's not even an SOS, which is kind of bonkers to me, because I'm like, well, how do you even get above then? And then you realize that it doesn't need to be, because if the first one is just an advancement, it's just a giant LPS in the range. It doesn't have to be really long-winded like I drew it here, but the second is the SOS up to 20, and then it can do whatever it wants. And it may even be, again, a distributive motion. So there's certainly like a lot of elements here at play, but one of the things that I kind of noticed yesterday when we were doing it is like, well, as much as I don't like it, it actually fits quite nicely because of the way that they have traversed the ranges. And again, this looks wrong because it's like shifted, right? The way that these ranges have been traversed, this is actually what happens because the shift occurs. That gap that was created in the drop down, which is at like 1960s or something like that, that gap actually does, if you do the translation correctly, it does. That's why I said this is the reason why it's so different, because if you only get here on the first run up and then there's a second run up going into February, even though that looks like way too low, and it does, it's not actually completely wrong, because if you shift all of it back up, all of it shifted up actually does give you, so again, all of it shifted up does give you the original price hits of like the 40s. It goes back up to the top and hits that $40 mark. And that's kind of the bare minimum for this kind of reaction. Like that's what I would have expected coming back up, because there's a wave down and a wave back up. So you have this kind of, unfortunately, this kind of idea that like maybe that shift is really needs to be applied forward thinking from now on, and it's really non-negotiable. It's not like something that will, well, maybe we'll do this because reasons, as opposed to like, well, give me like really good liquidity reasons, right? Because this is what I thought was going to happen before, and it kind of made sense. But again, it happened from this lower junction. And if you take away that shift, or you actually use the shift as it is, and you kind of let it drop down, it doesn't present you with anything higher than that value. And again, at first that seems wrong, but then you realize that like, if the goal was never to run it up anyways, then it actually doesn't read as wrong. So what I mean to say is, if you didn't know like what the answer was going to be, and you thought that this was going to come up in the future and come above the top, or like come back up and retest this top up here. Let's say you thought it was going to come all the way back up here. Then your reaction here would be something of kind of a double whammy. You know, and even if you thought, well, maybe it comes up to this top, right? It comes back, test that original opening value, which is what I thought. Then it would make sense to some degree to go ahead and breach that level and go up and hit that like opening value level. And that's what I was originally thinking. And it made a lot of sense because there was an angle right here that it's like, yeah, that gives you the right angle. It's all kind of perfect, you know? So in this particular example, it's like you get what you want to get from it. You get the rebound and then it comes up and it hits above there and then maybe it distributes, but it's already kind of where it needs to be. But that's an assumption that the shift itself didn't take place, right? And also that, and so that it doesn't matter, right? And so that when it does shift, it's going to definitely do the same thing. So when you drop that variable down, you're like, well, it's going to come up here. And again, there it is. Again, coming back up to the $40 mark. Simple enough. That does work if you think that this target was the one intended target. But it's possible, and this is where you kind of get to this place of like, oh, okay. It's entirely possible that there was never an intention to get there, that the intention, even if this hadn't shifted, would have only been to come back and retest that LPS, ultimately being roughly around the top of 2020. And that really was the intended buy-in. And the way that our current chart is setting up seems to indicate that may have been the case, that it really wasn't to go back up and hit that floor from where the original opening price was, which I think is logical. It also makes more sense in some ways in terms of the wave. It just does. There's other targets there, and there was another one that was lower. And it has to do with, without, again, going too crazy on this, it has to do with, I'm going to flip it back. It has to do with this target, and it's going to get kind of muddy. But there's like one other one. So here's the one I used very frequently, which was this guy, which is on the breakdown. I still think this is a great target. There's 1, 2, 3 hits. There's a couple signs of weakness, and then there's a final drop off. Great target. This is the one that I used that I thought was going to kind of yield the results that I'm talking about, where you come back up and you retest the original valuation numbers by like, near February or whatever, so on and so forth. But technically speaking, the hook value is always something that's also possible. And there's multiple ones. There's actually one right here. And then there's another one that's like slightly higher. Both of them kind of meet up in varying spots. If they were to go to that target, they wouldn't do it for a really long time. And at first I was kind of just assuming, well, that's the only target. So then that just delays the action. That's not necessarily the case. What if the target is the same? Like the target region is the same, but the actual target itself is just lower. Like the timing hasn't changed, but the target itself is just significantly lower. And so we started looking at, and I did this before, this bottom as a likely candidate over here in like February or whatever for that potential bottom as well. There were things that I guess I'm thinking about like now. I'm thinking about how there's been a lot of times where this ledge, it happens all over the market. This is not an AMC specific thing, but there's plenty of places where this ledge drop in is approached, but we don't actually get that wave that at that time. It's approached, but then it abandons the journey. We could look back at any of these and probably find an example. So here's an example of one right here. So like this is SPY, the S&P 500. And if you go to look at the ledge that was made, it doesn't make it to it. It just doesn't. There's a reaction up here. You can see it reacts to the kind of the bottom, but it takes a long time to really get to that ledge drop on the LSPY. And this is kind of a more bullish example where it's going to continue afterwards. It takes a really long time to get there by comparison. There's a huge amount of push back up and then it runs back up. This is really common, is what I'm trying to say, that this happens quite a bit, where you even run up into a gap a little bit and then you'll retreat from the gap and then go back up later. So this idea that it will come back to that ledge is not untrue. It did come back to that ledge, but it took significantly longer than maybe was expected. And if you had been looking at this as, and I'm not going to be able to draw the same comparison perfectly, but if you had been looking at this as like a triangulation, which I do quite often, there's not really, there's multiple ways to triangulate it, but one thing you would say is like, well, it should be about the same distance or whatever, and you'd have to find a measurement tool, probably would use something like this or maybe this edge to do like a wraparound or something and see when you think it's going to come back through, but you have to kind of know where that point is, so on and so forth, okay? I'm not going to like get into that. My point is that the first reactions back up don't actually get there, and that's really common. Like super common. I wouldn't say it's all the time, but a lot of the time that happens. So when I'm looking at this, I'm like, man, it seems a little out of whack, because like what we just drew doesn't really make a lot of sense to me. If it's going to go up, I'm just going to do a really simple version of this. And if we're to break the high and hit like 1450, which is kind of what we originally had thought, and then it comes back down and then it jumps again. There were a lot of things that were suggesting that that was in the right place to occur. Like there's a ton of information out there that suggests that's exactly how it could happen. So I'm not saying like it's not possible, but one thing that strikes me as very odd in this kind of scenario is that there's this kind of like assumption that it would definitely go up above this point, or at least to this point. And that's not really the case. And so when I did the thing yesterday, it was like super low. It was like, it only went up to like $9 to $10, and then it came back down and it checked 4. That's actually extremely consistent with what you see in 2020, where this move goes up into the pocket above those two, right? It extends high. I mean, in this case, it is an SOS. It does extend high into the LPS. It does, right? But then it comes back down and it really camps right on top of that previous range. And the top of our previous range is 560. It's not way up here from like $10 to $8. And so if you start looking at it from that point of view, it's like, well, actually that makes more sense. But then likewise, the second move is also like back to where it should be. And that doesn't actually go up to the top. It goes to this gap value. And at first, again, I was like, that's so low. $20? Really? Even in like my most conservative outlooks, I would not have suggested that happens. That it couldn't go beyond there or something. But then I go back and I look at this and I'm like, well, that's where that gap is. I mean, if you look at the transference, that is where it landed, right here. Which means that if you use the chart shift, this actually does give you the return all the way back to 43. It's in la la land. It doesn't exist anymore, right? But it does give you the return back. Maybe a little beyond it. It's possible, especially given the angles that we have, that this goes a little beyond it. So it's definitely not impossible this goes beyond 1960s and goes up a little bit higher. The reason that's so significant is because like all of that are measurements based on like bottom levels. And ultimately, like they have to make sense from like a fib scale and all this other stuff, because they won't not make sense. They have to make sense from a Fibonacci scale. They have to make sense for retracement purposes, et cetera, et cetera. What we saw is that there is a good, strong, like if you go again, look at that retracement with the shift on, there's a strong case, depending on where you think this lands, there's a very strong case that this is a 50% retracement from ultimately the all-time top. If you go from the all-time and you go to like where we think this is going to land, which I can't do a perfect translation right here just yet, but I think, it hits, let's say you think it hits 180. Well, you can find that valuation by kind of reverse engineering the number and like say, okay, well, it's 180, then we move it up here, it's here or something, it's at 470. Look at where the 50% is. The 50% on the retracement is right at the gap. It's right on the gap. It's perfect. That would not appear to us as unusual at all. The 50% retracement is right there at like 43.40. You know, it's right where that bottom was made and the gap was made. And if we had seen this chart in its whole form without any kind of shifting, and this is where the second half of the chart was right here, I think nobody would look at that and think that's particularly weird. They would say, well, that's just 50% retracement after a reaction after downside. What it doesn't do is it doesn't necessarily breaks out. And that's the kind of interesting question here, right? It's like, well, just because it does a 50% retracement from here up doesn't mean it has to break out. I mean, that's a 50% retracement that could do anything, right? At that point. And interestingly, this is where I come to my thought yesterday. We finished. The last thing that I kind of looked at was that trend, and I was like, wait a minute. So there's a trend that we still have, and it's just this outermost trend, and it exists. It's not like hard to find or anything like that. It's pretty straightforward. I have it on the other chart, so I'm going to switch over. But basically, that trend is the outermost creek, if you want to call it that. It's the final kind of stopping point trend, and that is this trend that goes all the way back towards the top. There's a consistency to it. If you have, especially if you have extended hours on, there's a pretty strong consistency to that trend. This parallel runs basically all the way back to the top and comes down. And what was interesting to me was that if you use the extended chart hours, right? Well, let me put it this way. If you use I got to make sure I do this the right way so you see it. I'm not sure I'm going to be able to get this right anyways. I should have just redrawn it on this chart to begin with. You kind of have to use the extended hours to get this hit. It doesn't exist without the extended hours on, but I'm just going to kind of estimate it. So if you use this as like roughly is what it is, should be pretty close to this parallel on the bottom. It's pretty close. Yep, that's the shift value as well. When this finishes, with the exception of currently what you're seeing, when you look at the valuation as like a 50% retracement, when this finishes, this actually ends up back at like 43, maybe a little bit higher at like 50. Okay, so this jump makes perfect sense because this is right where it should be. But notice, like, that's where the reaccumulation is. Notice, like, that's right on top. It is in the right spot, and it's right on top of that range. Interesting. Yeah, that seems right. So even this angle works here because then it jumps back above. Right? It's above the creek. It's a creek jump. And then you get a second boost because it's jumping the creek. Sound familiar? It should sound familiar because it's exactly what happened back here. You get the first boost, there's a reaccumulation, and then there's a second boost. It jumped the creek. It didn't just happen willy-nilly. It happened because it jumped over this major downtrend. So it makes perfect sense, and that's exactly where it should be. In this model, it's between $12 and $20. But notice this makes the most sense with the chart shift because of where it's actually doing the buy-in. It's doing it right on top, exactly where it did in 2020. But when you do it, and so therefore when it's over the top, Stallone, when it's over the top, even if this went sideways and came back down, you're kind of still in this expectation that, like, over time, right, that this is still technically above the creek. It is. So you could have like a full-on retracement at a later time and come back down to like $3 or something like that. And it would actually be fine. It would be totally reasonable to say that. It'd be a gigantic M cross right here, you know, just like this did, but it wouldn't necessarily go lower unless it took a really long time. I guess it could. But the problem with this is that, again, you're kind of assuming that move is still going to happen the same way, and it's not. When you use the shifted values, and we did it, and this is what I'm trying to say is, like, the local trajectories are in the right place, but they're not giving us super high targets. It's not that they're not there. They are there. But if you just read the chart as it is, they're not giving you targets here and here. They're giving you targets with the shift value, which is like here and here. So when you take the shift value down, it's no longer going up to $50. It's going up to like a little bit over 20. Like it's basically half the value, which is kind of crazy. But again, that makes sense. 226%. It should be something like that. This doesn't go way beyond the top. This instead goes maybe above the top a little bit in an SOS, but ultimately has to come back down to near $4 and then reaccumulate after the bounce above between this pocket from 5 to 7. So when you're doing the measurements, you have to know that when we look at this and look back at what happened in 2020, I take it very seriously that there's a 50% marker and that this actually sets up on that 50% marker. And I think that's really significant because, again, knowing the bottom and knowing where the middle should be gives you that marker. It should be evident in the current chart and it should be comparable. Like there can be a side-by-side comparison to find the same marker. So I'm doing that and I'm looking at it and I'm like, I think that $6.30 is very low, but I think that might be the marker. Like it's right around this like $6.50 area, which is back here on this little hook. It doesn't look very important to me. But I have previously found, especially on balance volume, that the area between like 550 and 650, and at one point I thought it was like 613 or something, was actually like the middle, was the most likely middle of this kind of range structure down bottom. And the on balance volume supports that idea. So I guess what I'm trying to say is, if you look at the structure here, there's kind of like an inconsistency in that we think that this LSPY kind of deal on the way down would kind of work out the same, that you would build right back up to that value. And I'm not saying that's not possible, but that's really using like an extended model. And it's not using what's actually here, which is this bizarre like flattened model. So again, it's like assuming that it's all sideways like it was back here, or it's assuming that they're not going to accumulate at all from 5 to 7. They're just going to leave it and jump over it. So if you're in that mindset, it kind of works the same way, where like this would go up again, and it would kind of build over this $20 area at some point, but ultimately jumps over and goes up and it's done, right? Now you're above the creek. But this model is kind of particularly curious because it would suggest that you don't actually do that. Instead, what happens is that we don't jump the creek. And as a result, the 630 area is really the area that gets kind of broken. And you do run up, and you might run up above 20 something, but ultimately you're not doing some kind of massive creek jump. Well, why does that matter, Booksy? Who really cares? Because if you shift it, doesn't mean you have to shift everything else. I don't think so. I think this chart shift idea is necessary for understanding valuation, perhaps, and maybe what the plan was to begin with. But ultimately, you're still going to use the same creeks. And again, the proof is right there. It would have worked perfectly. Like if you use the chart shift, it would have used this creek exactly where it should have been. That's what I just demonstrated. So it's still there. But now if it pushes up over the top, you have this problem of like, where's it going to go? If this goes back up and it does not jump this major outer creek, it just pushes the resistance, it's entirely possible, if not even plausible, that it tries to use this as like a support, just like this was used back here. And you can see where we're going to kind of run into some issues, right? Because if this ends up being like the same support level, but it's like transferred higher, then you can go back and use the shift value. Well, what happened here is it actually goes and wraps around the bottom support, right? Like the lowest end support, and it dips below that frequently. That would suggest that at the end of this, it doesn't necessarily hold higher. It actually could come back down and again, like dip below it. This does the exact same thing that it did over here. And the reason this is so obnoxious, if you want to say that, is because it's essentially like the same exact thing again that we're already experiencing, you know? So you take away all this like fluff. There's like so much noise on this chart. I know there's a ton of it. If you take away all this fluff and you look at what I'm suggesting, it's obnoxiously simple and also kind of, again, frustrating. But basically, you're just saying that you're thinking it's going to happen all over again. And it looks too low, but it's really not, because you haven't made the actual advancement yet. So what's happening is that you're pumping up, again, in simple terms. Like, I know this isn't exactly the way it's going to look, but in simple terms, you're like pumping up, but you're not going to like $40 or $50 over time. Sorry, it'd be like here. You're only going up to like $20 here. And then what you're going to do is come back down again without all the extra stuff. You're basically going to come back down and you're going to do it again, but this time you're going to build like a lower base. And when I look at that, I'm like, that's kind of annoying, right? Because it's not really what I wanted to see happen. But it does make sense, because if this is a phase B bottom, you take it out to like the daily or weekly time frame. If it's a phase B bottom and this was a distribution, then you really only have to get as high as you need to get. And like, look at where that is, that weekly average coming down. It's going to be around $23, $24 by the time we get there in 2026. That's exactly where it's going to be. If the goal was to test this level, you wouldn't be able to make this make sense. But if the goal is just to have a distribution, then this actually makes perfect sense, because then what you're doing is you're kind of just distributing along the same factors. And just to make that argument a little bit clearer, we're basically saying that this micro right here, which we already said we think it's going to iterate again. Well, I do. I think it's going to iterate again right there. That basically that's happening on like the biggest of scales, right? And I think it is. And then ultimately what happens is that this is like a big upthrust before what? Well, spring. Well, didn't we just get that? Think about it. Because again, this is a lower low, right? But because this was like the auto reaction and it did a SOW, then the way you would label this, just in terms of like basic stuff, the auto reaction would have been here with a potential phase B top. And I don't think the auto reaction is this whole thing. I don't. I think this is probably the auto reaction. It comes back up. And at most, it's this one, you know. But we would say that this is probably it. If that's a weakness after the auto reaction, the buy-in, there's a weakness, then that means it's an SOW. It comes down again. This is not necessarily a spring. It could be that this was a spring where it gets pumping up and then going into a spring. It could be that fast. But remember, this doesn't ever go high enough. It doesn't hit the top. It doesn't push the resistance. It doesn't create that normal push that you would see because of the chart shift. So if you use the chart shift, it's like maybe it happened. And that goes back to like where I was. I don't even think it happened because it only came up to here. It never pushes the resistance. So I remember saying that I thought it was going to go to 14. This was like a year and a half ago now or whatever. I said I thought I was going to go to 14 because it would push up, and I didn't really think about the fact that there was a chart shift, but I knew like where those levels were triangulating. They were triangulating coming up to this edge, essentially, but on a shift. But because you don't have that, it never made it up above, right? That's unusual. Usually in a phase B, you would have a, if it's going to do it, there'd be like a phase B bottom. And the phase B bottom doesn't have to necessarily be higher than the first bottom, right? This could be very bullish and still have a lower phase B bottom. But I've been saying this whole time, the reason I thought this was going to go to 4 and then drop back down, kind of like what happened back here, is that sometimes it generates that bottom, right? And then it goes into like a spring mode locally, and then it drops down. On the bigger picture, this would have to come up and check that. It would just have to. It'd have to come up and do this test right here. And a lot of times it pushes the resistance out, and that's right before you get to the spring. This happens all the time in the market. We look at it all the time. You get this like push of the resistance where it makes a higher high, right? And we've talked about that before. And then it just has to come back and either spring or LPS. So if it were to LPS here, it would maybe stay higher. It wouldn't go low, and it would break the creek. And that's your LPS scenario. But if it goes lower, it goes down for a spring. This is essentially the spring setup. And then it drives the price low, and it makes a new low, right, from here. And that is actually the spring. So you're counting these things. We're counting on like some kind of we really want it to be the spring. So we're trying to like make it into the spring is what I'm trying to say. But really, like in reality, this could end up being like the first phase B push. That's just kind of raising that resistance. And that's normal, because then what happens is that this creates a new creek that's a little bit wider. This is the buy-in. It often pushes. And you might say, well, that was a huge multi-million-dollar buy-in. Couldn't that have been it? Didn't push the resistance, so I know. But that's why this is so ridiculously important. You guys understand why I'm saying like the significance of this shift is of maximum importance. Because if the shift is still in place, we will jump that creek. That would be like you definitely did do it, and you actually are in this stage. We've already checkboxed this, right? Check. We actually did this. Never mind. And we're in this stage. But if you did not do it, the difference is like we're here versus we're here. Do you see the difference? That's significantly different. These are very different scenarios. In one scenario, it's like you may not even have made the low. You may still need to go for a real spring. And in the other scenario, no, you're above. You're not going to come back down again. And they both result from a very similar looking bottom action. So if the shift stays in place, what I'm trying to say is if the shift stays in place, this may only go to $20, which is kind of insane, and it's very low. And I don't revel in this. I'm not a perma bear. I am not. But I have to just tell you, this is what I'm seeing, is that if this ends up doing this, you could very easily have a distribution that drops back down and actually makes a new low. And I hate to say it, but this potentially is where that dollar value is coming from, because I've seen that target before. And I tried to tell you guys, like, I didn't really like it. It didn't really make a lot of sense locally, but there's a bigger S-curve here that certainly with the shift value in mind does suggest that $1 is very likely. If you go from the all-time highs and you go through that value on the day of, all right, it's like right here around like 20 bucks. You see that? It actually goes exactly to $1. I kid you not. If you go to the all-time high, drag a marker through where the reverse split happened, it goes to $1. I'm not saying I want that to happen. So if you're going to sit here and say, well, Booksy, you did say that like a year ago. You said 14 and then 1 or something like that. Yeah, because I found evidence that long-term that could possibly happen, but I also found evidence that that wasn't likely going to happen right here. So I kept saying, like, I don't think it's going to happen right here. I think it's only going to go like 250. That's actually what I said in January of 2024, which was over a year ago, right? In that video, a lot of people misquoted me because they kept saying, well, you made it all clickbaity. And I'm like, well, it's the numbers. I'm not inventing numbers. They're just there. But no, like I didn't actually think it was going to go to 1 because it wasn't, again, short term, it's not supported. It just didn't make any sense. But long term, it could be. And if this ends up being respected as a shift, and I previously had not thought that that was likely until what we did yesterday. It was a big deal. That 1 hour of charting really kind of was like, whoa, that has way stronger implications than just how high it goes. It also then implies that this may not be the actual spring, that this is the buy-in before the spring. And we're literally experiencing, like in this arc, we're kind of experiencing what we're doing on the micro right now. That drop right there. Well, maybe, but no, not maybe. Like, take a look at it. take it seriously because it's not exactly the same, but it's really, really, really close. Think about this for like a little bit longer and I think you'll understand what I'm saying. This guy comes up to $4. It tests that bottom area, but doesn't exceed it. Look at what happened here locally with these creeks. If I'm right about this, and I might be, okay? I might be. We've had evidence as to why that would be the case. If I'm right about this, this layup here that's happening may go down as low as like, $2.30s, $2, something like that. And I talked about 236 because I was like, well, maybe it'll be, or 226, because maybe it'll be that dollar value, but only in theory, right? It's like the dollar value, but only in the substance of the valuation, which is $2.26. It's essentially hitting like a buck, right? Based on the previous time frame. And then this would be like sub $1, But this is really interesting because this marker right here, notice it breaks the creek, but then it still has another road down. And this is kind of what we found on the chart was like, well, it's still really low. That right there, that's the same exact thing that we're talking about, essentially the same exact thing that we're talking about here. Albeit, is this as steep? No. So it doesn't necessarily have to come down that low. Well, maybe not. Or maybe it just takes a really long time, And we're kind of in this like fast-paced world where we think everything's going to happen really quick, and it's not. Maybe this takes till 2029 or 2028. But that would be consistent because it would do the same thing. It's a long-form distribution, just like this was. It's a shorter version of it, as you would expect it to be, but ultimately has like basically the same outcome. And it would be something similar where you'd come down, you'd break through here, but you'd probably end up having, again, just like this one actually wraps around if you use the extended hours. I hate this chart, by the way. But it uses that as the anchor. That's why I did that. I'm sorry. I forgot why I did that. I was like, why did I do that? Because it actually did do this. It used this top as like the anchor post for that structure that came afterwards. So this would essentially be like another version of it again. It's really obnoxious, right? But this represents on its whole, like essentially the exact same thing. Well, what happens after that? Well, that's kind of the good news, although some people might think it's bad news because of how long that takes. But this is actually kind of good news because if that's the case, this means that you haven't actually done the distribution. Part of me wonders if that is a distribution and it just goes to zero in bankruptcy, because it could. I mean, in theory, if it were to just keep going, right, you'd be like, oh, it's done, gonna go bankrupt, right? So much for that. So this is just nothing. It's not even a giant wedge anymore. It's just some kind of like massive bankruptcy scheme or something. I don't think so. I don't think that's necessarily the case. This already hit, technically, if you look at it like that, this could have hit bottom either 2 times or 1 time. It would become a very large wedge. And ultimately, all you're really doing in this motion, even though, again, it's frustrating, you're raising the creek up. But that is very important. That's not insignificant. So like if this were to happen, you're basically doing the same thing here that we've done locally. You're driving the price up. This essentially becomes like that little hook we were talking about, like where it just kind of comes back up. You know that the media said it was because of Memorial Day weekend. They did. They said Memorial Day weekend propelled sky high stock. It's way up because of a record-breaking Memorial weekend. Okay, if that's the case, did I just get lucky by charting it over and over and over again? Or did I actually read into the technical something that was probably going to happen? And maybe, again, it doesn't have to be either or. It could be both. But again, it's like there's always kind of a reason there to sort of suggest that this is the reason that something happened. But if you think about it as more of an excuse, then it doesn't really, it's a question of just liquidity and buyers and sellers and like the overall arching plan here. So at first, this is like really frustrating looking, right? And you're probably thinking what I'm thinking was like, well, that could just keep happening like indefinitely. Well, maybe that's part of the problem here, is that we're not getting what we want because we're looking at 2029, and that's right here. And that's like a default time, right? Because they've already extended their loans and they really need to kind of make that push. I think that this has to happen at some point. There has to be a change of character, as it's called. Like you have to kind of iterate the same thing and do something different. You can't just keep doing the same thing. If AMC keeps doing the same thing it's been doing, this is what's going to happen. So if you want to like know why, it's not that anything has changed. It's because nothing has changed. Because this is the current model. It's auto reactions with signs of weakness that then break down later after a distribution. Like that's it. And if it does it again, it's going to do the same thing, and it's probably going to respect 20, not 40. It's not impossible that it goes up to 40. That's not what I'm saying. I've told you guys a million different times, a million different ways. There's reasons why that might be the case. But I'm saying that based on what we did yesterday, it seems like there's a strong possibility that it actually doesn't go that high. And if it doesn't, then I think it's very likely that we're actually in this sort of alternate scenario of we haven't actually made the spring. And the spring would be here, essentially between $1 and 260. And even in that, you're probably thinking like, well, what the heck about this other value then? And all I can say is this, is that I don't think from a wavelength perspective that this really makes a lot of sense going beyond maybe 2027, you know? Like it just doesn't. From a wavelength perspective, it just doesn't. But we have shifted the value of the charts, and you can't really ignore that. You know, at the end of the day, it would be easy for me to say like, well, it has to come back here all the way up. It will come back because that's the marker, but that's not really the marker. You know, the marker is significantly lower long term. And also, the fact that it didn't go up doesn't necessarily mean it won't go up in the future. That's another thing. It's like we approach those targets doesn't mean we won't ever go to them. This would be like a macro version in a lot of ways of this little micro that we've made, which is a huge chart. And it's confusing, but it actually still works very well because at the end of the day, when it's time to kind of like go, unless, again, something changes, and I'm suggesting that, you know, again, this is probably going to change in 2029 at this point, just based on the way this is set up. That seems very likely, unless something changes ahead of time. That unless something changes, you're kind of iterate the same thing over and over until you do finally make this jump. And once it does, it's going to be very like boring. You know, it's not going to look particularly different. It's just going to be on the top, and then it's going to hold like $3 or $2.30, whatever new low we make here. That's probably going to be the ultimate phase B bottom. So this would be a spring, right, that comes back up and retests whatever that bottom is here in 2029. And if it had made a higher high, then even if the iteration's kind of the same, then you get a change of character. I don't know, Booksy. It seems a little bit like too much, too far in the future. I think you can't predict all that stuff. I don't think I can predict that it's definitely going to happen. But what I can say is that it's definitely not inconsistent. The idea of us shrinking into these iterations and forming like these kind of micro crosses later on after hitting like specific lows and then doing it again and kind of expanding it and then repeating and rinsing and repeating. It's been going on for the entirety of the history of this stock. This is all this is just a repetition of the same thing over and over again as often as you can do it. There are certain things that have changed. The buy-in numbers have changed based on where we are. I think that's a big part of this, is that as this is going through this process, as it's driving the price lower and lower, you're getting more and more and more buy-in, which is a good sign, but it doesn't mean that it can't make lower lows. And it also doesn't mean that this particular motion here is bad. It just means that this is like a temporary bottom. And now we're going back to check it, and we're probably going to go back down and test the lows to check it. Again, does that mean it's not a spring? No, it's still a spring. It's likely going to come above the top of this range. That's a spring. But as soon as it gets above the top of the range, it's a different game. Now you have a change of character at the top if it starts distributing around 20. That's it. That's life, you know? As soon as, you know, this has accomplished what it needs to accomplish, advancing beyond the top here, it's not really like it's done. It's done the advancement. Now it gets to decide what's next. And it could easily do exactly what happened here, which is it just sort of changes direction and comes back down. And that would be consistent. That's what I'm trying to say. That would be highly consistent with what we see on AMC, which is a bit unsettling. So if you missed it and you're just joining and you're like, man, this guy is still going on about like bearish stuff, it really comes back to what we did at the end of the day yesterday. And it was a comparison between 2020 bottom and this bottom, and really what is there and what's not there. And what is there is very strong. There are a lot of really strong similarities, a lot of very, very similar setups. What isn't there is the directional input that we got in 2020. It's significantly lower. It just is. It is not the same. And it suggests that you don't actually do like a double up where you double up in the same way, but you do it in like a shrinking way. And then this, in effect, turns into, which isn't all bad, by the way, but this, in effect, turns into I don't know, it's kind of weird to say it, but it effectively turns this into a creek jump with another creek jump later, but it's essentially turning it into like a widening wedge. And this is exactly what we experienced when we saw these iterations down bottom. You start with this very narrow idea that it's going to like break out. And then when it breaks out, it like widens it out, right? See that? It jumps out and comes down. And then it does it again. It jumps out and comes down. This is kind of accidentally a great example. I didn't do it like necessarily on purpose, but it's a great example of what we're talking about, because here it's doing the same thing. It's like push the creek. But if it comes back down to make a spring, A, it's consistent with what we saw in 2020, but B, it does lend itself to this idea that the bigger picture might do something extremely similar, and that we actually are not in a spring, ultimately in a spring right now. We're really in like a phase B bottom, right? And I think that's very, very significant. So that's not a small thing that I'm saying, because I'm basically saying that I would have been wrong earlier, at least about the initial, not necessarily the fact that this is happening and that it's breaking out, but that this could essentially, that 2026 is going to be way up here. It's totally logical it could be down here. And then in 2029, if this manages to do the same thing, which, by the way, look at this area, look at this area. They're the same. That's, again, by design, probably what's going to be like. Now, this one might be a little further over. I don't know. And again, I'm not going to try to get this like perfect with timing, but I'm suggesting to you that this is basically the exact same thing, right? And that you're building out along a new bottom that's about to be created. That the bottom we're about to make, wherever that is, isn't the actual final spring. It's actually the phase B buy-in. And in some ways, this makes more sense, because if you noticed, like what we've done is we've generated distance from, again, that bigger creek. And no matter what happens, there's no way to close that distance effectively unless you walk up like really slow. And we've already kind of come to the conclusion that that's not likely going to happen because of the 2-year nature of the 2-year cycle here. I think it's not going to happen that slow. But what it means is that you're going to leave like space here. We've generated like a huge amount of space. So when you look at this and you're thinking like, well, man, that's a lot of time that just kind of killed and we're not using it and blah, 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 blah. That's not really the case. Again, going backwards and looking at this big picture, you're like, well, it kind of makes sense because we leapt over this. We may come back down and trade along that bottom again, just like we've done every time that we jump a creek. We did it back here. We came back down and traded along it. The idea of like, well, we might do it again isn't exactly profound, you know? It's pretty straightforward, actually. So the idea of like, well, we might come back and come back down here again in the future, yeah, it's unsettling. It doesn't make you feel good, but it's certainly a possibility. And this actually would suggest you come really low early, maybe even 2027. And if that happens, then this is going to be a lot worse. It's going to be like a double flush. What that means is that you're basically going to come back down here and probably use this. I don't know how, because this looks like 40 cent to me, but you would use this as like a excuse to flush up out of the wedge and maybe even flush down, which again seems kind of incredible to me, but it's certainly not impossible. It's just one of those things. Like, does that need to happen? I don't know. Should it happen? I don't know. That's not really the answer I'm trying to give. I'm not trying to like say, yeah, that definitely should happen because reasons. I don't know why that would or would not need to happen. But this kind of gives you an evidence of like a build out around $1. Again, which all-time high to that shift value to that day of when it split, that's a even 50-50 to 1. So it's a sense in like something would have to change at some point, and then if it doesn't, this is not a spring. Ultimately, this would be like another weakness that you pop up and you die, basically. I think if it's a spring, it's possible that this could recover. Again, by nature of like just fib retracements, we don't know for a fact this is going to go past $1. But by nature of like fib retracements, like the 618 here from the top to $1 is where the Judge Zern decision was. That's like the golden pocket. Normally after a breakout of a wedge, if you broke out at $1 later on, you would say it's a 30 to 60%. You could get a 60% move from that breakout, which just so happens to also be at $1. So maybe the breakout is designed to be at $1. That could give you a move up to $50 in the future. If it ends up going significantly lower for some reason, maybe it goes down to 30 cent. I don't know. Wherever the low was on Ape, you know, like that was like 60 cents or something like that. Maybe that's where it ends up being. I don't know. There might be a reason for it beyond what I'm saying, but it goes to this place of like real low lows. Then you break out at $1. It puts you back up into that range, excuse me, that we had originally anticipated. So you might be saying, look, why would you do all of that? That doesn't make any sense. Why do anything in the market? That's the question. Why do anything in the market? There's only one answer, and it's liquidity, in my opinion. I think that's it. I think that's the only answer. Well, liquidity is not really an answer, Booksy. Yes, it is. The market thrives on trading shares. Shares have to be traded in liquidity. Liquidity doesn't exist. You have bad trading. That's all there is to it. You don't make money when there's no liquidity. The more liquidity, the better. If there's a desire to get back to a certain value, but you don't have the liquidity to get there, you have to go searching for it. And that's all price discovery really is. Well, you know, I've read so-and-so say this and this and this. Like, I know there's a lot of different like views about that kind of stuff in terms of like manipulation, and there's no real price discovery and blah, 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 blah. I get it. But you can't operate that way. Like if you try to operate that way, it's all just random. It doesn't make any sense. This at least makes sense because you're taking a stepped approach that says, yeah, this is buying in to sell back off to drop it lower because they found a lot of buyers down here low. And then every time they're doing that, you're generating like bigger patterns, sure. But ultimately, like the goal would be to get you back up to a particular level. Why does it work so consistently? Why does Bukowski do thousands of metrics and they end up giving him like a very high probability breakout rate for certain patterns? Because cause and effect. That's a Wyckoffean principle that a lot of people don't like in this market because they don't trust the market makers. They don't trust the operators. I get it. I totally understand that. They think it's all manipulated. It's all fake. Price is fake, blah, blah, blah. I get it. But if you don't use it, then technical analysis makes no sense. And it doesn't, It's not like it goes away, you know? Numbers are just numbers. So you can say like, well, that doesn't make sense. It's all just manipulated. Well, then why does it work? You'd have to just kind of keep going on that same drum. Well, it works because they make it work. Okay. You know, like, but then it still works. Like, you can't ignore the fact that it still works. Technicals don't work. Yeah, sure they don't. You know, that's all I got to say. Whatever. Whatever, dude. You know, if you don't think they work, you don't think they work. My point is saying that, like, the reason that would make sense to me is because if you're trying to get back up here, but you had a problem with liquidity, which did happen in this massive sell-off that happened, huge liquidation, you now have to do new price discovery and basically build it back out. And if you know that there's catalyst events coming up in 2029, you have plenty of time, widen it out and do as much as you can here. That doesn't necessarily mean they're going to be successful, but I'm telling you, man, if the EMU, your Vanguard or BlackRock, if they go through this process and they find plenty of price discovery in these lows, I guarantee you they're going to do exactly what they did here, which is they're going to take it up so they can drive the price backwards. If they find plenty of buy-in every time they dip below $2, they're gonna look for it because they can trade and make money through the whole process. They don't have to worry about time. They don't have to worry about what cards they're holding. Like, they hold all the cards. Again, manipulation, right? But we can look at that data and interpret it and decide this is probably true. Well, how does that work with the squeeze and GME? You tell me. You know, GameStop did not do this retracement. GameStop didn't have this liquidity problem. They don't have the same kind of debt issues. They don't have the same kind of cash burn issues. They may even have like a positive EPS, you know, year over year this time, as opposed to like a slightly negative one last year. Like, they're not the same company. And they are doing things in a waveform that's very similar in a basket. I would argue that they're similar in terms of how the timing and the wave and the buy-ins work. But ultimately, liquidity has drastically been different. Been way more sellers in AMC. And probably for good fundamental reason. So these are not like, to me, this isn't really that complicated. It's more just, okay, that's a facet of life of like, well, this is totally possible because I don't think that you can assume that this is definitely a spring. And frankly, usually you're looking for 1, 2, 3 hits on a bottom. So if you think about it that way, as an expansion, this could easily have like 1, 2, and then this could be a third hit, like on the bottom of like a very simple structure here that hasn't even happened yet. Well, what about that? That should have been the third hit. Well, this is like a double bottom hit. Didn't go back up to the top. This is a zigzag. Goes up to the top, back down again. This counts as individual ones, I think. Usually the third hit is where the biggest buy-in is on either end. If the third hit hits here in a spring and breaks out from like a newly formed wedge, which is what this would become with the yellow, then it actually makes perfect sense. Then it has the ability to make this kind of massive recovery move, and it's been trading down here for like 3 years. That's a huge buy-in. Yeah, but what about all this other stuff that you talked about? I don't know. I don't know yet. You know, that to me is a mystery. What about the wave here? I don't know. Like I said, I don't know yet. It's a mystery. I don't have all the answers. I'm looking for what makes the most sense to me. And then I'm also considering that there could be something about that gap fill that is new. Like, this is possible. This is not something I've done where I'm drawing it from here through the middle as opposed to through this. I've been drawing it through this and then shifting it down. That gives you the answer. But I'm like, you might think that's a cop-out. Like, well, you just did that because you saw it there. Sure. I did. But I'm also thinking, like, they're probably going to use the chart as it is. That's what I'm saying. Like, this idea of a chart shift It really matters the most right here as it relates to the creeks that we made before that Judge Zern decision. But I think a year or two out, I don't think it's going to matter anymore. Like, I think once you get to this top at 20, that's where it's going to be determined whether or not that shift is at play. If it stops at 20 something dollars, that shift is at play. It's completely irrelevant what happens. Meaning, like, I will not use that chart shift anymore. It will be irrelevant. I'm being genuinely serious. It's kind of like this would be like one is now overshadowing the other. It is no longer necessary to do it because it's now confirmed that we're using this chart. And it could very well be because of that yearly cycle that happens around August. I think it's very likely even. You can see that the moves that happened in 2023 and then having it be, starting to build back out. 2026, February, that's like right here. There's all kinds of little question marks right there, I guess. But like this idea of like resetting it, that pretty much for me solidifies the reset. I wouldn't use the chart shift anymore after that because it's irrelevant. Now a dollar is just a dollar, so on and so forth. Whoever sold all this down here, right, down to this level, they're going to be out over here. Like that's the exit. And once they exit, I think it's done. Like I think you're kind of going back to a reset and see what happens. That's what I'm saying. I don't think it's necessarily that this chart shift is going to last forever. I don't think it is. I think it matters right now because we're still operating under like the same flow, like as if the flow wasn't broken, it was just shifted. I believe that. And I'm not going to ever change my mind about that at this point. It's been way too much quote unquote coincidence. It's absolutely the right numbers. Because it's perfect. And it's not even that like it's perfect. It's like it cannot be broken. Like I can't break it. I've tried. Every single time I try to use the chart shift, it doesn't break. I'm like, well, it's just at this point, I think it's just the way it is. But I do genuinely believe that if they make another mark here and it's probably where it's supposed to be, like right around here, I think that's going to be it. I think that'll probably be the end of the chart shift. You don't need it anymore because you're kind of done with this move. Now you can kind of just work it from where it is. And it doesn't necessarily mean it's going to come super, super low, but it definitely gives you a sense of like finality, I think, that this is now the new chart. Some of you guys are going to look at this and say, well, there's going to be a split value if it drops beneath a dollar. Maybe, charts split for a lot of reasons. Certainly, like if it hits a dollar and it skirts around a dollar for a while, you may not see any kind of real impact. Might be on and off. Once it drops below, yeah, they have to do certain things in order to stay on the stock exchange. Usually you can get some extensions and this and that. And it's just despair. I mean, that's the big game at the end, is like getting people out of a play. It generates despair. So this is a really frustrating idea. I get that. And I'm with you on that. Like it's super frustrating. But I also think that it makes perfect sense. And I'm in this position of like quiet resignation when it comes to AMC. Because I just feel that there's no reason to be like FOMOing into this chart. GME is a different story for a lot of reasons. But I have said previously that GameStop may make an all-time high very easily. It could go back up to 200 again and kind of rinse, repeat. But there's certainly evidence out there that suggests that there's very many bearish parties that want to bring it back to like $4 and $6 because it jumped certain creeks. It just never came back and checked them. It may not ever do that, but it's still there, And the waveform here, again, frustrating as it may seem, is not inconsistent with what we see. If in fact this is developing into like a long form wedge, this actually makes quite a bit of sense, because you would have a creek here that goes significantly low. You would jump that creek and then you would come back down to it. Like, that's the most typical thing that happens. So you know what? This is the same as like every other thing that we've talked about on AMC. You know, you take it with a grain of salt. You don't have to buy into the idea. I totally understand that. I get it. But I'm also not going to sugarcoat it when I find stuff like this. And I'm just going to kind of tell you, this is what I found. Like, this is what it is. Make up your own mind about it. The idea of it being disruptive to plans that you may have, I get it. I'm frustrated as well. If that were to happen, obviously, I'd be sad, to some degree. But it is a warning, I think, as well, to not overestimate your chances in any particular stock. I mean, this would cause maximum despair. And the idea of, well, there's a lot of people out there who are diamond handing, who are never going to let it go. Yeah, there are those people. And then there's a lot of people who are just feel like they're trapped. And this is definitely not going to sit well with those folks. And I think there's a sense in which, again, from a very basic like waveform perspective, this actually almost makes more sense than some of the other stuff we've talked about, because it does utilize what's already there. It's like this is positioned really low to do like a wraparound right here. So going up to like 215 all the way up to 20 or whatever generates a nice 50-50 wrap around this target, which is now like a cross. And then it comes back down on top of it later on, probably after some time, making you believe that this is going to hold up. It's usually the way it is. It like holds up really well, and then it doesn't, and then it's horrible. It's pretty typical stuff. So, anywho, right now we're down 11%. Okay, I said I wasn't going to go through like, I'm going to take one more screenshot because I don't know if I'm going to use this one anymore. But I said I wasn't going to go through everything I went through yesterday. But I just want to like really quickly hit those points, because it's a lot of implications there that are extremely different than a lot of the other stuff we've talked about for AMC. And unfortunate, perhaps, for a lot of people thinking that it's definitely going to go up to like hundreds. Well, what if it just squeezes, man? You can't predict a squeeze. You don't know what's going to happen. Right. I also breathe oxygen and drink water to survive. It's like no one here is claiming to be God. No one here is claiming at all to be a know-it-all. Like, I know everything that's going to happen. I don't know everything that's going to happen. I don't know that this is going to be that way, because things can change. Change is also, one of the most certain things in life. It's like, that there's going to be things that maybe don't happen the way you think. You might be partially right, but not completely. But I just view it as a simple exercise in like, all right, what is this showing on the whole? Why did you make the assumptions that you made? Are those assumptions valid? Can they be dismantled? It's very empirical, like kind of scientific thinking, I guess. And I like that kind of stuff to a degree. I'm also somebody that thinks that, again, I don't know everything. I do make mistakes, and there's probably a good likelihood that something in that was wrong, When I did this comparison, though, there's not really much else to say other than it's just setting up low. Like, the same markers here that set up, and again, it's upside down land, so this looks like it's pointing down. These are the exact same markers. They're almost identical, and we went through and looked at them, and I finished it, and it basically yielded this as a result. The only thing I'm not really certain about is like the lowest low. Like I don't know for a fact it's going to go as low as 180. I think it might stop at the 226 mark. I really do. Because there's a cross trend here that just didn't really, to me, it was like, I looked at it and I looked at it and I looked at it and I'm like, there's no consistency. It's either going to go like super low to like 170 or something, or it's going to not go that low. And I think there's a possibility that the 190s hit, but the way it's built out is just a little nuanced. You know, it's just not quite the same. And there's some elements that are very consistent, and then there's some elements that are less consistent. But this guy here was probably one of the most consistent when you look at it up close. I'm on the weekly right now, so it's not showing very well. But that one right there was actually very consistent, and we found that. And it doesn't suggest that you go lower than like 220 or something like that. So it doesn't feel right to do that. And then there's nothing else really here that supports like a significantly lower low with like any kind of strong credibility. This is the only other marker, and that's like maybe the 190. So there were not a billion different answers. There were only like two, is what I'm trying to say. And they were pretty different, but I couldn't really pick one over the other. The other thing here was that, again, this is setting up, and this is, again, upside down. So this looks like it's going down, but this actually sets up very vertical. And this is quite the opposite. So this all of these peaks, this is even like a sign of strength. It's going up. This is not doing that. It's all of the stuff is pointing downward, including this kind of red marker, which the way this built out does, again, lead to evidence that this doesn't necessarily go the way we think it's going to go. It may not have this kind of massive move, and then it may only come back down to look at like $4 or something like that, or $4.30 in the future, and it's consistent. Like, that's the crazy thing, is we went through and looked at it all. It's like everything's tight. It's all there. It's just not way off into the sky like this was. Everything's flatter. And it makes sense because if you're trying to position this in the right spot, it doesn't need to be positioned like way up there. It needs to be positioned here, which is like 7 to 5, not way up high, which this one was. And so there's a distinct kind of difference in where it is based on, I think, where the liquidity is that they're targeting in the future. So they purposely have kind of left open this gap zone here for reaccumulation, and then they've driven a price towards the 1050-11 that does work out for this fall, but it's not higher than that. Like, it's just not. There's no way to do it unless you're just really trying to like fudge the numbers in your favor, and you can't do it. It's dishonest. So when you do it like honestly, as best as you can, which is what I tried to do yesterday, it's just low. And we gotten whiffs of that when we looked back at this comparison to some degree back. We were looking at this October region, and this widening was angled down. Like, it was a very low angle pitch. It wasn't like steep. And so there was kind of a strange early signal there, because we were talking about that maybe a month or so ago, that this one was not really positioning super, super high. And I did a small comparison. I was like, I don't know, it's very low, it's wide, everything's like lower, and it takes a little bit longer than expected. Nah, Booksy, we're just going to take off in June, man. You're making it too complicated. We'll see. I don't know. I mean, if you want to make any kind of like critique or claims, that's fine. But just recognize that, like, if you're going to scrutinize the work that I'm doing, and I'm putting in a lot of time to a lot of these things, I reserve the right to scrutinize what you're saying as well. So if you say it's going to take off in June, man, just because, and strongly disagree, and I think that that's fine. I'm not against people disagreeing, but just keep in mind that it's a two-way street. And so if you're going to come in and strongly disagree, at least have some kind of reason for it, a really good reason, hopefully, that required some energy and time. Not just, I heard something on X or whatever and I'm parroting it. Well, so-and-so says this and they're better than you. Okay, that's a good reason, you know. That's a good reason, I guess. But it could be a great reason. It could be somebody that's far more knowledgeable. Well, you don't use the options chain enough. You need to use the options chain more. Yeah. Did the options chain tell you it was going to run to $4? That was a big argument that people were making. No, it did. Because it was going to run up into June. I don't know. Maybe. I didn't hear anything about it. If it did. Well, it did, Booksy. Maybe. I'm being a little bit sassy because when I was thinking about yesterday and like what happened, and we have a lot of people that will come in when the stock is running really hard, and then they don't show up any other time, and that's fine. I get it. Time is valuable. You can't spend all your time every day listening to some quack job on YouTube talk about charts. But there tends to be a little bit more like of a reserved kind of nature to that, where people will come in, they haven't seen it, so they tend to be very quick to be like, well, I don't get what's going on, or your charts are messy, or this or that. And I see those comments. I don't always reply to them. I don't. But I see them. And I was just thinking about like how there's and I've been there before. Like I've been dishonest and I've been intellectually dishonest. I get it. But like that's not a good thing to aspire to do. You know, it's not good to be like intellectually dishonest, and certainly not just dishonesty in general. So even though I've failed in that way in the past and not been honest, I think that it's important to try to be as honest as you can be. And so I'm going to like continue to stay true to the stuff that I'm doing. And if it doesn't jive with somebody else's work, or if it doesn't make sense to you or whatever, you know, you get to choose how you want to approach it. If you want to approach it as like a maybe proposition and then just sort of take it or leave it, that's fine, you know, or just kind of keep it in the back pocket as like, well, this guy talked about the possibility that it may run up to 20 and not go any further. And it was really kind of a crappy thing, but he did do a lot of work and it kind of made sense based on liquidity. That's fine. You know, like to me, that's enough. If I've been able to influence in some manner the way in which you approach the chart and it's been beneficial to you, then I don't feel bad about that. I think that's a good thing. I think it'd be a very good thing. I only really ever get upset when it feels very dismissive, you know, like there's a dismissive nature to it. And I don't feel like that's very fair. So I said yesterday, I didn't really think some of the comments didn't seem very fair, because it's like, well, that doesn't really work with the way that I do things. And the way that I do things matters here. It's my channel. Like, I get to decide. I try to like change it if I need to change it, but it is what it is. And I do find that it's pretty effective. I mean, when we looked at this yesterday, I was just mentioning that this 10% drop feels like a lot. It's really like a 50% retracement of yesterday. It's not hugely significant. We went down like 12%. Well, we were up 24% yesterday. So to get a 50% drop after a 24% day is not a huge deal. And probably you're going to, we're seeing it already. You're going to get a little bit of a bounce on that 50%. I'm not convinced it's going to run significantly farther. I think if it did, it may go to maybe to 430, but I actually liked 407 as a top. I think in extended hours, it went to like 410. But I like both of those numbers. Those are pretty good numbers as a potential top. The only other top that I had was 430. And then beyond that, I don't think it's very likely, but you could technically see like another move up. And there was some possibility of like 461 was the next one up that I really liked. The rest of them were very like way out there. Yeah, I felt like they were kind of unreachable to some degree. Like it could happen, but it'd have to be on like a gap up or something. Didn't seem very likely. What's curious is that this chart was made without the help of, like this was just me using what's currently available in the time zone that we have and like where we've missed backups and where they might go to and what would happen if it went down. When I did the chart inverted and looked at the timing and considered like the comparison, they almost look exactly the same, which is kind of freaky. And it's not because, again, you may think, and I know this because I think myself the same way. I was like, well, maybe that's just you. You're just biased because you think this is going to happen. So you're like subconsciously trying to prove that it's going to happen or something. Maybe, but I think that it's not impossible. Sure, it could be. I'm not going to say no. Everybody's biased, right? It's possible that because I think that this is likely going to happen, I'm trying to find different ways that it happens. But it's really also just an exploration of like where those levels are, and they're in the right space. So regardless of if it happens or not happens, or if Booksy's biased and he's wrong in the end, it doesn't go down that far or whatever, it makes an LPS and just keeps going. It doesn't really make a huge difference when it comes to just the levels. Like the physical levels are there. So the physical levels that you're going to look for, the levels that are most critical here are the 316 level. That one's very, very, very significant. 316 came up in both approaches, and $3. Now, there are, of course, other markers there. Like there's one at 338, 320, 291, 296, 297. Like there's a lot of little markers there because when we were coming down, we used some of these as marker points. Like we dropped from them or we created a resistance or support on them. But in general, we've been saying like 330 to $3 has been the sticky zone. That's still true, and I would suggest that 316 is probably one of the clearer levels wrapping around like this 316 to 320 region. If you want to just pick that little zone, that's one of the clearest levels that we have. And there's almost like a 0% chance that if we go the other way, I know we're still in upside down land, there's almost a 0% chance that if this goes the other way and goes south, that they're not going to be hit, is what I'm trying to say. So like, I almost guarantee it. Like there's going to be some kind of a hook level around 320 to 316. There would have to be. And it probably will present itself maybe a little bit like a head and shoulder, but ultimately there's going to be that. And then there's also going to be a breakdown around 340. It may end up being close to 360, but I think, and it could push as high as 378, but I think that ultimately that level is going to break like right here, about 350, 340. Not right this second, but there are some steeper trajectories, and they're basically going to act as moderate support while you do some kind of a caddy or distribution here, probably for the next 10 days. That's the most likely scenario. Could it accelerate one way or the other, and change? Yes. But because of the distance created, that's the most likely scenario. So you're going to create a pocket between 330, 380. You're probably going to create a caddier kind of distribution, and it's going to look that way. Maybe it runs after that. We'll see what happens at GME earnings. But I would not be surprised if GME earnings propels it up on like the 9th or whatever, and then that's kind of like the last hoorah for now, or vice versa, right? If GME is already up on that date being a drop. And I think that that's going to be pretty evident when we get there. We're not there yet. There's no point in worrying about it right now. I think we'll be obviously in that right mindset when we get there to know what to look for. But for now, it's probably just going to shake out, head sideways a bit. If we get another buy-in, like I said, maybe 430. But then after that, I think going into mid-June, we're going to start seeing a slump pretty bad into about that July 11th area. That's where the tariff deadline is. I don't think tariffs greatly affect what we would be dealing with here in terms of the movie industry and so on and so forth. I don't think they're going to make like a huge impact, but as an excuse to kind of drop the market, they might be a very ready to use excuse. It would not surprise me to see some kind of inverted or double flush move at that date, one way or the other. That does end up roughly estimating to be about the middle. So if you look at the earnings date and you look at where we are now and you look at where the center is, it's on like July 2nd. So it's in that middle pocket. So between now and earnings, that tariff deadline's kind of smack dab in the center. It's pretty close. And we don't know for sure that's where they're going to do it. This is an estimation date of August 6th. I don't know for sure that's where it's going to happen, right? For all we know, this thing could drop hard and go all the way down and hit a spring on the 11th and already be on the way out by earnings. But all I can say is that did add up correctly. The other thing I would say, meaning like when we did the comparison, it looked correct. The other thing I would say is this final stretch here, if you go to the lows on May 15th through May 22nd, if you look at those lows right there in that build out, and if it does have a breakdown, then you're going to look at where that breakdown was. If it's on the 9th, which is again that earnings date, that's going to signify, if it crosses that trend at that time, that should signify where the halfway point is between the bottom on April 4th and I'm kind of thinking it's going to be earnings, but it would be basically where it's going to sort of hit low. Could be right after earnings or right before it. There's a window here that we measured out. So if and when that breaks down, that's going to be a really critical point because that should indicate the halfway marker of the waveform here. And then the rest of it would be just kind of downside or whatever, however low you're going to go. Then the last piece of this puzzle, which I did address yesterday, but I want to kind of readdress it today, is the on-balance volume. So on-balance volume is going to be a key indicator here. And part of this thesis, this idea that I had, that we would pump up and then drop into a spring, it was based on what happened in 2020, but it's also based on like common sense, which is that if you have a spring action, you're trying to like load up as many as possible. You're trying to load up, and typically it's people FOMOing, you know? So again, could this have like another buy-in? Well, we did see that. I mean, originally when I did this, there was a possibility that has another buy-in June 12th or 13th. That would be after GME earnings, you know? It could go up one more time. Maybe it hits that 485. That doesn't mean it's necessarily running. It's just that there's a possibility the wave is a little wider. And so what I'm trying to do is I'm trying to kind of keep those expectations in check and be like, well, I don't really care. I'm just kind of waiting to see where that move happens, the breakdown, if it does happen. And then ultimately, if it makes a little bit of a higher high, does the OBV, so if it comes back up again, and let's say it pushes after GME earnings, it pushes up one more time, would that be inconsistent with this idea here? No, because really, like, it's like the same thing. Like we've already talked about that build out in going into like the 13th. So if this built out again and went up again, it's just another upthrust. You could easily then have like a new date of drop down right after that. It's not going to be significantly different, you know, be like a week later or something like that. So it almost doesn't really matter to me. Like we'll see what happens when we get closer to the 9th. But the big thing for me is the on-balance volume. And we've previously talked about this quite a bit. I've been very adamant that the on-balance volume should hike up significantly down here. And it needs to do so in order to then drop significantly down to here, which is at 17. On the 4-hour chart, it's like, right now, the peak here is like 45, maybe 46 million. And then the low that I'm looking for is somewhere around that 11 to 18 million. And it's because I think that that's really why we're doing a distribution here. Is we're trying to like distribute to get that on balance low before a bigger move, which did happen. It was a reset point that was generated back here when we first dropped in on September 6th. And that reset zone is then met multiple times throughout this as a resistance and support that does kind of carry through with, to some degree, the price action. You can see there's a marker that runs through here. To some degree, it carries through. But what we found is that there's a stronger correlation with the on balance than there is with the price action, because in 2020 the same thing happened, but the price never comes back as low. So if you were to generate like a trend between these points of interest here, you wouldn't find that the price actually hits it in the end, which makes sense because it didn't actually come all the way back down to like the outstanding creek. Instead, you find that it goes to it goes there on the on balance, but it barely makes a new low, right, in 2021. So when it's doing that, though, it's interesting because it becomes kind of a contrast, a divergence of sorts, where you see that the on balance has drastically come down to meet this price, but the price itself actually stayed higher, and then it bolts, right? That's the comparison. So we're waiting to see what happens. I would say, like right now, do I think that it's come high enough? Might be a good question to ask. I'm not positive, but I did a couple different ways. I kind of did multiple analysis on this, right? And I think this is a little confusing the way I did it because there's like all these different trends going every which way. It really boiled down to like one trend, which was an uptrend, and one trend, which was a downtrend. And the one I added was this red one. And the one uptrend is the dotted line going up, and the one downtrend is the dotted line going down. I think the dotted line going down is the establishing downtrend to try to kind of triangulate where that level is down here at that particular time around earnings. It does a very good job of it, and that is the target region. So that's kind of the main reason that I have this one, was because it seems to be following that quite nicely. And then also it failed to come lower, so it's going back up to the top. It could present itself potentially that this is like a flush. So this goes to the upside. You're like, well, flushes don't go up, Booksy. I hear they go up in Australia, okay? So he goes like, I'm from Australia and I can certify we do not flush toilets up. They definitely go down. Be like, yeah, I know. We just swirl the other way though. Yeah. Reverse the polarity of the... reverse the polarity. They definitely could do a double flush here where this is peaking above and then drops below, which again could be a very radical savages. Yeah, for real. I'm just kidding. Australians have like one of the best accents in the whole world. I can't really complain. It's beautiful. Almost as beautiful as like the southern accent, which is probably my second favorite. And then followed by like the Scottish. Because like that's all English speaking accents. Well, I speak English. I don't really know very many other accents. I'm sure there's accents in other countries. There are. I mean, that's definitely a fact. I don't know why I said I'm sure there are. There are. Because, like, isn't it like the Spanish that they make the th, like, lisp? They have like a th sound. I forget what it's called. I don't know. Anyways, so this particular move right here. G'day, mate. This particular move right here is possible. That you have kind of a flush above and then a flush below. The one thing that I would say that did not happen, which could potentially be the reason we go up again... It's possible. North Mexico and South in terms of accent. I believe you. Yeah, I don't know. That's what I'm trying to say. I'm just ignorant of it. I'm sure there are. But I was just thinking about like when you're English speaking, those accents are pretty dramatic. So I'm sure there's pretty dramatic accents elsewhere. This I wouldn't be able to pick it up though, you know. This is what I originally had thought because again, it's if you look at the comparison to 2020, it actually goes very, very, very high. Even though the price doesn't ever really come up that high, the comparison in price is almost irrelevant at this point because it already hit 4. So it doesn't have to hit higher, but if it did, it would probably be at 470 or maybe 485. It'd be right around here. So if it were to be just drawn to comparisons and price level, that's where it would be compared to 2020. So we're going to hit 485. I don't know. Maybe, like I said, it could have one more buy-in, maybe on GME earnings. That could cause that to go up again. It's a risk, but I'm sure it's possible. And this is part of the reason, is because the iterations are really just there as these giant pumps with drawbacks. And that's kind of what you see in 2020 as well, till they stop, right? So if the next one kind of leaks out into the 11th, my expectation is that the on balance is probably going to stay kind of elevated, like pretty high. And then your price action is going to chop right here around the 350s. Then if it breaks again, I'm really thinking that it needs to have like a huge move, because if it's going to do what happened in 2020, it needs to go way up here. It will be, let me clarify, it will be disproportionate to the price action if this happens. And frankly, kind of already feels like it is to some degree disproportionate. So anyway, so one possibility is that you're doing a wraparound of this downward trend, in which case I don't think you need to go any higher. Like, I'm pretty sure it's fine as it is. Like, you could definitely see why it doesn't need to go higher based on the way I'm drawing it, because this is still just a 50-50 around the downtrend. It also has there's some pretty decent evidence based on this pop here and how high it went, and then where the price went and the on balance went. It's a similar setup, but a steeper setup. So again, do I think that it definitely goes up higher? No. But if it does go up higher, then what I'm looking at is another trend, which I had drawn kind of, I won't say originally, but I had done with first with a widening, and then we had another uptrend, and that would take you all the way up to this top here, probably above the peaks at 50 and up to like 60 something, maybe 65 million. That's important, because if it does that, you might think, well, then it has to have a huge flush, right? Not quite. If you look at where this is on the red, it's actually the same. So it's just a more dramatic flush on balance. So it goes from red to red either side. It still takes you to the same place. Well, that's no help, because then it doesn't give us the answer. I'm aware of that. What I can tell you is that I am aware. What I can tell you is that it's not that the price is irrelevant, but it's not as important as the on balance in this case, when you're talking about these particular things as like target regions or whatever, because it won't be, it's unlikely to be perfect anyways, like 1-to-1. It might rhyme a little bit. But what I'm trying to say is, like, it almost makes no difference to me, because if we go up again and the on balance is way up here, it does not change the comparison to 2020. It doesn't suddenly mean that you're running. The same thing happened in 2020, and then it dumped like off a cliff. And the price action did not. The price action did not just plummet to the earth. It was not proportional. And likewise, if it stopped here and it didn't go up again, I still think you can get that same move or close to it. I also have to just kind of preface this by saying, like, I'm not 1,000% sure. And that's okay. Like, I'm not 1,000% sure that it's going to be at 11 versus 18. Well, why does that matter? Because measuring these things out, it matters. You know? I mean, if I were trying to be really exact, I kind of have to know exactly where it's going. But if I think it's like a range, then it gives me a lot of room on the top and the bottom. And again, I don't really know what the operator knows. I don't know what the liquidity is here in terms of like selling versus buying pressure. I can kind of guess based on what's been drawn out and what hasn't happened, and what has happened, and how much we moved on how much volume and all that kind of stuff. If I were the best technical analyst in the world, I would probably be able to tell you. And maybe not even the best, just much more adequate than I am. Because, like, that's not the most comforting thing you've ever said. I'm just saying, like, there's probably a way to figure it out and to, like, have a strong concept of what the volume is trading and how much the price is moving and who's winning it out. But I don't know how to do that exactly. So I can't do it. What I can do is kind of look at general principles of, like, okay, you're going up on no volume. This is what it means. You're going down on no volume. This is what it means, vice versa, so on and so forth. And there's not really much to suggest, again, to me, that it wouldn't go to a spring. I've said that repeatedly. Like, I think there's plenty of evidence to suggest this probably goes into a spring. But how low, how fast, I can't tell you. All I can say is that measurement-wise, it goes out to about earnings. And again, January 11th is kind of in the middle. Excuse me, July 11th is kind of in the middle, which is that tariff deadline. So I'm going to be watching on balance volume quite a bit as the days move on. And I'm going to be really looking to see if it gets that bigger buy-in. Does it go way up high? And that's going to give me not necessarily a new answer, but it reinforces this idea that it's very similar. And let me tell you, if it does that and it drops down here and we go into a spring and then we start breaking out, I'm going to be, that much more convinced that this is likely going to happen because the setup is extremely rhythmic. It's doing a very similar motion. So, so far so good. I'm not particularly concerned about a 50% drop after running quite a bit. Some people are going to be really concerned about that, about losing like half the percentage move or whatever, but I just don't think it's that big of a deal. It didn't make sense to me that it would keep running. It was way overbought. Way overbought. We said that yesterday. It was more overbought than it was in May, of 2000. That's insane. Of last year, of 2024. The idea of GME going to 220, what would make it go there? I guess a short decision, but more than that, you would look at that as a comparison between sections of iteration is kind of the way I described it before, of like it's building out larger and larger iterations of the same thing. I don't really want to go like too crazy on GME right now. I think GME needs to take a breather until earnings. That's why I'm like not really sure. This S curve is kind of done. I don't really see it as not done. There was one model where this comes back down. It looks like it's what's happening. This came really low, and maybe it chops back up, but there's not, I don't really feel beyond that any reason to predict anything just yet. My prediction was 32 to 35. Just like when back here I was saying maybe 28 to 29. And that's it. I can't really say exactly how it ends up after that. What I will say though is that the way this is built out, the reason that it goes to 220 is based on the principle of an S curve predominantly, and then also iteration after iteration of constants. If this is distribution, then we're just going to keep doing distributive models until we hit like one of the tops, either 61 or 130, and then you're going to drop. You're not going to go significantly higher. But if it's buy-ins, and they've been really fairly consistent, you'd be expecting it to kind of boil up and either cross or not cross. And that's kind of what I think is going on. Is we've had a very consistent iterative motion, 1, 2, then even 3, 4. We just did another one. We've had many of them, and I've already done like the big chart on it. Again, I'm not going to do it all over again. It's a messy chart, but it makes sense to me because I'm measuring the iterations out. And what I found is, again, quite straightforward. It's not particularly complex. It looks complex sometimes because my charts are so messy. This is the wrong one. This is like a really messy one. This has like a lot of old stuff in it. But I don't know where the curves went. Where the heck are the curves? They're not there. Most of this stuff is me doodling. I need to like get used to like deleting stuff when I doodle it. Because like this doesn't mean anything, now. It's just me talking about something. This was some kind of long-term thing. Maybe it's just on the other one. Let me check. Probably. Let's go to the weekly on here. I hope I still have it because that was like my bread and butter chart. Right. So there's a possibility of like 220, partially because of the nature of this uptrend right here. If we're assuming a new uptrend, that's the angle directive, and it does go up to about 139 to 220. So that's one of the ways this works. I'm kind of thinking I lost my curves. That's bad, dude. What happened to my unbelievable? That's what you get, man. Having messy charts. Yeah, but it's like they're gone. It's like they just vanished. Great. I don't usually do that. Usually what happens is I put them in a basket and then hide them. But this is not the right one because it should have the green and the blue. Ah, this is it. Thank goodness. Okay. Phew. Okay. I got really, really worried. This is my reasoning right here. So you can copy all that, then you'll have it all. There's all the answers. If you want me to tell you what would make it go, like what fuels it, it's the same thing that fueled the original squeeze. It's shorts covering. It's all kinds of stuff. Like I don't know. LSX, you have to always often ask me a lot of these kind of questions, but I don't think you ever feel like I'm giving you a good enough answer. Because you ask me a lot of the similar questions like every time we come on. I don't have another answer. Like the way I do it is the way I do it. That's it. I can't tell you what would cause it to go up there. You know? Like what excuse would the news have for why that would move up? I don't know. No idea. Would they call it a short squeeze? Probably. Would it be a short squeeze? Probably. From a technical perspective, there's a dozen things going on that would lead you up there. I just showed you like big trend wise, it could lead you up to like 220s, maybe even like higher. But even like looking at this, this is a wave within a wave. There's a downward wave here that would be distributive. That would come down in November. We talked about that one. That wave is not done. It could still happen. But thus far, the M cross here, which is where we thought it was going to be, it's right where it should be, it jumped up. If it continues to jump up, it's going to come up over 45, and then it's probably going to be donezies. That would be like in August. It'd be right here. If it goes up there, it's going to come up, it's going to break up, and then come out, and maybe that simple to 300. I don't know exactly what it's going to look like, but it would be outside of all the major creeks and trends and stuff. That causes like a markup, you know? A markup is when you go from one range to the next. Why does that ever happen on any stock? We could say that it's because of some catalyst news event, but the reality is that there have been people trading that range for a long time. And it gets to a point where the range is no longer needed. It's like the liquidity is dried up. Some people say that the liquidity has been satisfied. They would say that it's essentially exhausted. You move on. Well, who gets to decide how it moves on? It really isn't rocket science. It's who's finding more liquidity? Are the sellers or the buyers finding more liquidity? When they tested the lows of the range, did they find an absurd amount of sellers who wanted to take it lower? When they tested the highs, did they find an absurd amount of highs who want to take it higher? And then sometimes things happen, right? And then with the springs where you're going the opposite way that you think you're going to go, but it's because you're going for a final shakeout. Same with the upthrust. There's always a reason from a technical standpoint that you're marking up or marking down. And it usually is like upon the completion of the range. So what I've said here is that, this is entirely possible. Nobody likes this idea that it comes down to like 7 or like 4 or something ridiculous. But because of the way this is set up with the creek jump, it has to do the same thing it did before over here when it creek jumped, which is it has to kind of refuse to go back down. So this goes all the way up and it refuses to come back below. This went all the way up. It has to refuse to come back below. It has to keep making the same decision. Just like AMC keeps making the same decision and going lower, GME needs to keep making the same decision. And when it gets to that M cross, which is kind of what I'm doing here in these diagrams, like where those are, it has to make that decision to mark up and not down. And if it does that, and it could do both, that's the weird thing, because it could technically come down here into a spring. That's not impossible. And based on the fact that this is a channel, it certainly is possible that it does go down before it goes up, which is kind of crazy to think about. But that's what we were discovering when we were messing with the waveforms. And then we talked about, gosh, I don't even know what this is. It looks cool. I'd have to go back and look at it. But we were talking about how like this is pretty much the same thing every time. It's just whether or not the cat ears go up or down. And then looking at this as a measuring system, how do you measure a wave? That's what we were doing. This looks really cool, but I can't explain a lot of this. I don't remember a lot of this stuff. I think we were just looking at fib retracements and like what that does on the impact of the wave. I just don't find it to be a particularly like useful exercise of my time to try to figure out what exactly has to happen. It doesn't matter, It's important for me to know like different outcomes are possible. That to me is a useful, effective use of my time. I don't really think you have to understand every inner working of the market. Knowledge is very good. And the more knowledge you have, the better. Sure. The more you can kind of approach something multifaceted. I just said that earlier today. It's better. It is. But if you need to have an effective use of your time, then you're going to have to just decide what's worth it. I don't know. I know you do. You just like asking questions. You kind of just have to decide what's worth the time. Like, and something like figuring out why this goes up it's just not worth my time. Like, I'm not into those kind of things beyond what's technical, which is why I like the Reddit ideas and some of the more conspiracy ideas, not all of them. And then certainly like the options chain is not my strongest suit. So I don't look at that stuff because it's not really giving me the information that it gives other people. It's not that I don't think it's useful. I just don't use it. It's like rollerblading versus riding a bike, I mean, sure, like one might seem more efficient than the other to some people. They're just going to pick what's more efficient. Some people just prefer to do one over the other, or they understand it more. They're still going to get the same place if you're doing it right. I don't see it as very very useful to kind of like imagine it. I guess if I have an opinion, I just spent a lot of time explaining why I don't want to give an opinion. Instead of just giving you my opinion is that it's probably going to have something to do with this Bitcoin investment and the treasuries investment, which apparently people forgot about. But GameStop invested in treasury stuff a while back, and then treasuries went crazy. So there's a possibility that their investments pay off. Bitcoin starts running and does a bigger move. It's already been running. It's up quite a bit, but it could do a bigger move, There's a lot of reasons, I suppose, that something like that might happen. I worry when people like BlackRock get into Bitcoin because I know that they're not buying directly. They're doing like an ETF kind of thing. But I do worry that if they do invest in it as a part of their treasury or whatever, that they're going to drive accumulations, and accumulations will go down first. That's how they do it. So, because they want to buy lower. So they fabricate sell-offs. I do worry. The more institutions get involved in crypto, the more they're going to be run through their algorithmic programs. Yeah. Blame it on the cat. Bring back rollerblading. The executive order stuff. Yeah, I remember those. I explored them all. I didn't ignore them. And back then, I actually used quite a bit of that. One of the ones that I thought was pretty interesting that I wish I had maybe not abandoned completely was watching operators and their liquidity and like looking at their charts and how they were trading. It was unique because they seemed to have like reset points that I thought were pretty fascinating. I think mostly, the reset points being the quarter to quarter system wasn't profound. It was just that when you looked at the motions therein, if you looked at the key operators in AMC at the time, it was like BlackRock and Vanguard. There was some really interesting correlations with maybe when they were doing their buying and selling and how that was affecting AMC. I thought it was fascinating. But the other stuff was not really worth the time. I would like chart it out and I would maybe see some patterns, but most of it was kind of a waste of time. So yeah, I don't know. I just get worried. I've been listening to that Fink guy. He's the BlackRock CEO, and he seems to be pretty pro crypto now. It's only a matter of time. They'll get their finger in everything they care about. It's mostly Bitcoin right now, but they did the ETFs for them or whatever. But the currency, the word you're looking for is fiat, and it's given value because we use it. And it's typically given value because it doesn't have a material backup, then it's given value by a promise, basically, that this is going to be worth something. The US dollar has been based on that for a long time because it's pretty obvious that we don't have the equivalent amount of gold to back up every dollar. In theory, I should be able to go take every dollar I have, go to a bank and say, give me the gold that this represents instead of the dollar, because it should have an exchange rate. That's the way it's based on like metals, precious metals. But the dollar is easier to carry around, right? The dollar bill. It's cheaper to print. Hard to give out nuggets of gold. And we all know the story from there. Inflation, blah, 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 blah. Currency's a fun one. But fiat currency, the idea of fiat, people think it's like useless or fake. I'm like, it's not really. It has value because we say that it has value, because we've attributed value to things. So instead of bartering for goods, like the value of this good is this dollar amount. So you can pay the dollar amount instead of trading for something of equal value. And that way it stands in place of the value. And I can take that and go somewhere else. Really only loses value if people in the society don't value it all of a sudden, which happens. And obviously that's a very big, broad way of understanding currency. But if you think about Bitcoin and you think it's fake, I would just say like, well, it's only as fake as long as if people don't use it. If people don't see value in it as this kind of international immortal currency or something, digital currency, whatever it is in the long run, then yeah, it's fake, doesn't have any value. But if people use it and trade it as if it has value, and it currently does have a relationship to the dollar value, then it's a currency. I don't think one or more people get to decide that. I think it's got to be collective society. So the fact that like BlackRock, who basically owns like half the world, and all these other people are buying Bitcoin. It's frustrating for the purposes of people who are just trying to get rich off Bitcoin, because they're probably going to have more regular trading now. It's not going to be like these crazy moves all the time. And you're going to have more time in like accumulation phases, for these bigger companies coming in. I think that the idea of it not being real, I've talked to my wife about it too, because she thinks crypto is a big scam. And I'm like, well, it's only a scam if, again, like at some point, people come to think that it has no value. The NFT thing was like that too. It got really blown out of proportion really fast. And there's a lot of question marks about that in my brain. Like, why? I don't know. But anyways. Time is real, yeah. 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 Jojo. That's kind of what we're talking about. And of course, if they can't pay it back, then the dollar loses value. I have no other real strong opinion. I have no other real strong opinions about dollar value and stuff like that and fiat currency. I just think that you can make your own currency too. Like we've done it in our household when my son was little, because it just kind of teaches him about things and like how that works. And you can make like kid bucks in your house, and the kid buck can be exchanged for different things, and yada yada yada. You make a little bank. So I guess my point, I wasn't trying to say anything like new. I was just saying like the way that comment gets thrown around to kind of discredit crypto, but that's not really how it works. And it honestly almost doesn't matter, Like I think about like Pokemon cards or something, and like to some people those could be worth hundreds and hundreds of thousands of dollars. And so it's bizarre to some because they're like, well, it's a piece of paper. It should be worth like nothing, as much as it costs to make. And I'm like, yeah, but that's the thing, right? Cost is never a problem unless there's an absence of value. And if someone thinks there's value in something, then they'll pay a cost for it because it's more valuable to them than the cost. I mean, it's that simple, right? Or it's worth it at least. I think it's an interesting idea. Money. But that's it. That's all I had to say. So you brought it up, and I was just thinking about crypto has been scrutinized quite a bit. But I'm like, if there's a person out there willing to pay for it, then it still has value. Charizard, baby. No, I know what you're saying. I'm just saying, like, it's a weird argument. It's like a weird argument you hear from people. Because I'm like, I don't know. If someone's willing to pay for it, then it's still valuable. So it's hard for me to think that Bitcoin's going to just suddenly go away at this point. I think it would be very bizarre. If it had some kind of major correction, it wouldn't surprise me, but to just like not have any value would be very strange. It would require a lot happen, I think. I don't even know what it would look like, to be honest. I don't really want to talk about anything else today. I think we just kind of want to hit the big notes on AMC, get through that recap of yesterday, and then talk a little bit about like short-term price targets. This is about as expected on most things. I think the chop here is fine. Some things are worse than others. They look worse for wear, They look like they might need more pullback. We are probably going to make some moves sometime soon, but I have other things to do, so I'm still in Apple. I don't worry too much. This didn't make another peak. I talked up Apple yesterday. This backed up to the creek and it bounced. I'm not really convinced it's going to stay up. I said it before. There's actually decent amount of evidence this could come back down to like 197. It didn't actually breach the top here. It went like a few pennies below, so it hasn't done what would be considered distributive. I think it's widening, and therefore if it can hold up, it's going to break out and probably go up pretty far. I'm thinking it might do some kind of a move up and then come all the way back. I'm not sure yet. That would make sense to me, to come up and then back down on the outside of this marker for like a spring or something may make sense. So we'll see. We're not there yet. People were maybe questioning it because Apple's got some problems for sure with the tariff stuff. It's very different than some of the other Mag 7. It's the weakest of all of them right now. But I just like it as a technical chart. I think it's a great technical chart. And I think that this motion right here, it's not perfect. Again, it's not necessarily over either. There could be some chop here for a while, for sure. But I think that this as a technical chart is very attractive to me for a number of reasons. That there could be a very simple spring later on doesn't really worry me. The way in which this is moving has great implications for a future big move. So I'm pretty convinced of that at this point. And that's all there is to it. So you don't have to love it. You may think it's garbage and it's going to drop and hook. But I'm not there yet. I think if it dropped and hook, it'd be pretty obvious. It'd have to be right here. I think in the meantime, there's going to be some chop, but I think it's going to punch pretty far beyond what people are expecting. I don't know what form that's going to take yet in terms of news, but I'm definitely thinking up to 240 is likely. So in the future, of course. I'm not really worried about threes. I think you could come down pretty far here. I don't think that the next move has to continue. So I think the next move could be like a final up thrust kind of move, if there is one. So I'm not particularly concerned about holding up at this point. It can make a 618 retrace and still pop again. 786, without necessarily being super bullish. That's what I'm trying to say. All right, guys, I got to go. I got lunch and some other things to do today. Appreciate you hanging out. Hope you have a great day, and I will talk to you tomorrow.